Thank you. Well, COG is a very, very different company in terms of scale and business that operates than the three explorers that came along before me. Just to start out, I don't have it here, but our profit for the year was, we made a net profit after tax and before amortization of 23.7 million. Down a little bit from the prior year. We pay an 8.4 cents per share dividend, which equates to a fully franked dividend yield of about 9%. So we're I guess, relatively a mature business, cash generative, and operating in a very, very different space. So what do we do? Next slide, please. So we have two businesses. We're a distribution business and an asset manager, and I'll talk around what they are because they're again quite different to the preceding presentations. But if you go back, distribution in our world, if you go back 30 years ago, banks used to have branch networks and they used to distribute their loan products, be they home loans or business loans, through the branch network. So the branch would have a bank manager who would make the decision in his local area, and he'd have a number of people effectively sourcing and originating loans for the banks. Now, over the last 30 years, that's declined, and so now across banks, about 70% of their originations come from brokers. So in mortgage land, you've got people like AFG who are an aggregator, and we're an aggregator. Aussie Home Loans, Mortgage Choice, all these sorts of businesses that have emerged over the last 30 years, they operate in the mortgage space, whereas we operate primarily in the equipment space and primarily to SME. So that's one side of our business, distribution. The other side of the business we have is lending and asset management or funds management. And so you can see the point of this graph is you can see the flow coming from our distribution businesses going across into our funds management businesses. Last year, FY23, we originated about 7.7 billion of transactions for banks and other financiers, but we keep a small portion of that and it flows through to our own lending and funds management business. Now, of the 7.7 billion, we probably pushed about 200 to 300, 400 million into our own funding. Next slide, please. So breaking that down a little bit further, you can see on the left-hand side, we've got our clients, the COG, and you can see things, trucks, cars, excavators, tractors, that sort of industrial equipment, but it's income-producing equipment used in small businesses. They're our typical clients. Then you come to the middle COG and you can see the component parts of our business. So within that, we've got novated leasing, and that's a very hot spot to operate. We've got larger competitors in that space, businesses you may have heard of, Macmillan Shakespeare and Smart Group. They're multi-billion-dollar businesses that operate in that space. Our novated leasing operations are much smaller but rapidly growing. Then in the middle sort of segment of that middle COG, you can see we've got the aggregation, and then we've got owned brokers and member brokers. What does that mean? So to talk around what an aggregator is, it's a layer between brokers and banks. Banks or financiers don't like to deal with lots and lots of little people. They like to have a layer with a system and compliance to operate between them and the bank, the customer. So brokers we own. So we actually own a number of brokers, and in that preceding slide, I had all those brands. You won't see COG anywhere trying to write a loan, but you'll see one of our many owned brokers. But then we have member brokers who just come in and pay a fee to our aggregator. And then at the bottom, we do insurance broking. So we have around Australia, a large number of clients, and so insurance broking and to a lesser extent novated leasing are cross-sale opportunities that operate out of our core business, which is broking and aggregation. Then off to the top right-hand side, the third segment of our business, lending and funds management. So again, if you're I don't know, we've had lots of miners on today. If you're we finance a number of mining vehicles, Toyota Land Cruisers. We can send it through to banks, or we can send that loan, that receivable from a mining company through and be funded by our own funding mechanisms. Next slide, please. So what is the strategy of owning all these businesses? Why do we pull them all together? So the way I read this slide is you start from the bottom, finance, broking and aggregation. It's a volume business. You have to operate in scale. We're 20% of Australia's market, operating in SMEs. So you have to have tech. It's a very stable, strong, cash-generating business with no credit risk, but the margins are tiny. Then as you go up, what you see are the cross-sell opportunities that come out of those core relationships. Insurance broking and also novated leasing comes out of it. But then you get to the top where the lending and funds management, where the volumes are smaller, but the margins are much wider. The other part I would say on our business is the SME space, the novated leasing space are all quite finite and constrained. The lending and funds management business is a business that can continue just to compound away ad infinitum because there's no capital required. We're just a transaction facilitator. So across our businesses, what we try to be is just a transaction facilitator. We don't like taking risk, unlike all you mining guys. We just want to clip the ticket and not have any risks. Same on our funds management business. And they're capital light and they just keep continuing to grow. Next slide, please. Actually, I pretty much talked to that one. We'll skip to the next one. So the next question is, what's going to drive our growth in the future? What are the mega trends that are going to push us along? As I said previously, banks rely on brokers for about 70% of their loan assets. This mega trend's been going for some 30 years. There's nothing that gives any indication that that's going to slow down. My guess, in another 10 years, you're going to go into a bank branch and there's not going to be a single carbon-based organism there. It's all just going to be ATMs. The non-bank sector, which provides a lot of liquidity to our space, is continuing to grow, and that provides a lot of liquidity, which means that there's no shortage of funding. Population growth is big in our area because, you know, we service infrastructure, construction, mining, agri, but infrastructure and construction, residential construction is going to be a big one pushing us along. And then the whole decarbonisation. So if we skip along to the next slide, please. Again, probably the most significant one is population. We're going to add, in the next 10 years, 3 million people. That's a city the size of the Gold Coast and Brisbane. That's hospitals, railways, schools, houses that's got to be built for all those people to live. I can't see it's all going to get built in 10 years, but there is just an enormous amount of work around Australia for SMEs, and that all flows into demands for utes, trucks, vans, backhoes, excavators, scissor lifts, you name it. There's just a huge demand for it, and that's where we play. Next slide, please. So that's just from the end of last year. This is our AGM preso, but there's already a lot of committed infrastructure in Australia. And then I've just put a bit of a dotted line. I don't know what that looks like, but the amount of infrastructure that's going to have to come through in the next additional infrastructure that's going to have to come through in the next 10 to 15 years as we turn our grid green. And, you know, all the transmission lines, power station, or not power stations, but wind farms and solar farms, batteries, they're all going to have to be built to deliver on our bid to go green. Next slide, please. I won't talk to this one in any great detail, but that's just from the government's own publications, all the solar farms and wind farms and transmission lines just down the East Coast. It's an enormous undertaking, and that's just going to provide a huge tailwind for the sectors that we service. I guess the analogy I use is it's an old one, a well-worn one. You know, we're just selling picks and shovels to the gold miners in the gold rush. Thank you. Next one. So we effectively facilitate the supply of equipment to Australia's SMEs. This is just a bit of a list about what's got to go and get replaced in the next 10 to 15 years as we transition from fossil fuel burning vehicles to electric vehicles. It's a Herculean task. The other thing I'd call out is where one sector of our business that's doing exceptionally well at the moment is novated leasing, off the back of the electric car discount bill that went through last year, where if you take an electric car under the luxury car sales tax through an employer-provided novated lease, there's no fringe benefits tax, so it radically reduces the cost of EVs. And it's not just us; it's Macmillan's and Smart, Fleet Partners, everybody who does novated leasing. There's enormous growth going there at the moment, and I can't see that coming to an end anytime soon. And you can see that even if you look at the vehicle import numbers for year to date this year, I think there's something like 30,000 Teslas have come through. Last year, the year to date was about 4,000. And so Tesla have gone up 26,000 units this year. Toyota's gone down about 30,000 units. So you can see the impact of this legislative and policy framework as it's playing out in our market. I think I'm pretty much out of time there on my 10 minutes, so I'll probably call it there and just go answer any questions to the extent there are any.
Yeah, no, absolutely, Andrew. Absolutely fascinating slides, and you're clearly in the right business at the right time, and it seems like things are going incredibly well. Let's start the first question. You know, the company is printing record volumes despite the highest interest rates. Who are your main competitors, and are they achieving the same type of growth as you?
Well, look, yes, I think it is. The 400-point increase in base rate and funding costs really hasn't made much of a dent in what I call the real world. People, businesses, small businesses needing equipment, income producing asset. I mean, yes, rates have gone up, but we're still close at historic all-time low unemployment. So it's gone from, it's just shifted the dial a little bit. But in our world, it's still incredibly strong. I mean, mining strong, agri strong. There's 3 million people coming in. There's just work everywhere.
Yeah, no,
but it's not just us. It's everybody. It's not just us. It's the whole sector.
Yeah, gotcha.
I wish it was just us, but no, it's not.
And look, you answered this question, but I'm going to ask you it again. Do you think the growth in novated leasing is sustainable? And are there any other opportunities to increase your exposure in this space? Look,
I think from the government particularly the Labor government, committed to, 50% off our greenhouse emissions by 2025. Moving electric cars is a relatively easy one to do.
Yeah.
Some of the other ones are much more complex. I don't know how you make planes electric, but cars are a simple one. They're trying, but cars are an easy one. So I can't see, and like even so, the numbers of electric cars coming in are still relatively quite small. I think that policy setting, and just we're at the very start of this process.
Yep.
And I think it's an easy one to deliver relatively.
Yeah, got you. Post the purchase of UFS and NFC, are you still seeing acquisition opportunities on the aggregation side? And are there any obvious gaps in your platform here?
Look, we're 20% of the market. We're the biggest player in our sector of the market. It's a scale game. UFS, NFC, they're about $1 billion of flow. We're circa 8 billion. So there'll be some other smaller ones for us to pick up. They're all incremental. The world's changed a lot. Cybersecurity is a big thing. AI, data analytics. We now do big flows. We have to protect our data. We have to analyze our data. So I think there will be a number of small. It's either get big or get out. Is the truth. And so we're not getting out. So we just got to get bigger.
Hear you loud and clear. And just to finish up, is the asset finance business still being held back by supply chain constraints? And how is the backlog looking now?
It has most certainly eased during FY23. So at the end of FY22, we got to the end of the year with $2 to $3 billion of kit that was on back order. We get to the end of FY23, that number's probably more like 1.5 to 1. So it's roughly half, but there's still significant constraints in some areas. Like I think for new Land Cruisers and and Hiluxes and very popular bits of kit, there's still quite. But on the other hand, some of the second tier stuff, like the supply chains have pretty much cured.
Andrew, I really appreciate taking the time today. Really fascinating story. One we'll be keeping a very close eye on. You have a great weekend, and many thanks for presenting today.
Thank you.